let's get it started. You guys see what I have on my screen, guys. So now I'll be all right. Can you guys see what I have on my screen? So if you guys can see my screen very clear. Now what we'll be talking about today is the difference between a change of character and a break of structure. Now these things are very simple to understand but difficult to identify on the chart because they look similar. So they are easy to identify, but they are easy to understand but difficult to identify when you are on the chart. So at least today, let's take a dive in how I trade market structure, breaks of structure, and how I trade change of character. The PDF you see on the screen here, I'm going to send this book into the community for every member of the community to have this book. When I'm done writing this book, I'm still adding more to the book you can see here. But it's free for every of the members. As you are there, it's free. So once the book is launched, I will send it to all the members. But for now, I'm still working on it. I'm still adding more topic. I'm still trying to simplify it. I'm adding more things, removing some, trying to make it good so that anybody that have a copy will understand exactly what that simply means. So all right guys, so let's jump in now. When we talk about BOS, right, because you're not going to see it as full write-up, what you're going to see is BOS. Now what this BOS simply means, as for smart money traders, it simply means break of structure. Do you guys get? That's what it means. It means break of structure. Some people call it BMS, some people call it different name, but break of structure is the one that everybody are very familiar with. Every other forex trader are very familiar with breaks of structure. Now BOS stands for a break of structure. It is a break in the current trend, continuing in the direction that the market is currently in. And I will teach you guys how to identify this break of structures, the time frame to identify them, the time frame to look out for a change of character as well. So now, if a break of structure is anticipate the continuation of the market direction, right? Or it tells you the direction that the market is currently trading in. Change of character, on the other hand, which is CHoCH, it is the first break against the current market trend, and it also indicates a potential shift in market structure or market trend. So now let's go onto the screen let's go onto the chart right now and then try to identify this. Now let's say, for example, right now we are on the daily time frame. Since we are on the daily time frame right now, let me see if I can even replay this guy. I'm out. Let's see if I can replay this guy. Okay, very good. So now if you mark out this guy on the daily time frame, if you mark out a demand zone on the daily time frame, so let's mark out this daily demand zone. This is going to be our demand zone on the daily time frame. So if the market comes there, this other block here, this other block is what we are going to use as the area we are expecting price to come to. So that's going to be a demand zone for us. That's going to be a demand zone for us over here. Now let's play price, but first of all, before we play price, let me change the speed so it can be something. All right, now all what I'm saying is this: Now we have a daily. We can see that the market is uptrend, right? Because the first thing you do is you try to identify the direction that the market is trading to, right? Now the market is in an uptrend. We can clearly see the market pushed up, pushed down. So what should we expect? Now that we've seen the market pulling down, this is what we consider to be the internal structure. This one, this pullback, is the internal structure. So we'll be expecting the market to respect the internal structure until it gets into this demand zone. Once, I know a lot of you don't understand what supply and demand is. Sorry, we've not talked about that yet, but that's going to be the topic for our next class on Friday. Now, once market gets into this demand zone, there are potentials that price can still trade all the way down into this other block, this last one, before the continuation to the upside. So what this simply means is this. What this simply means is this. We are not going to be buying immediately the market gets into this demand. We are going to wait for some sort of change of character. So what that change of character simply means is this. When the price finally trades into this demand here, we are then going to shift our focus to the 15 minutes. The 15-minute time frame is the time frame that I look out for change of character. I look at change of character on the 15 minutes and the 5 minutes. Those are the two best time frames to look at change of character. You understand? If the market is reacting from your daily demand or supply, if the market is reacting from your 4-hour supply or demand, the best time is not the 2-hour. The best time to look out for change of character is not the 1 hour. The best time to look out for change of character is going to be the 15 minutes and the 5 minutes. Those are the two time frames I mainly use for change of character because it works perfect. If you wait for a change of character on the 1 hour, then the market might have gone far before you can see it on that 1 hour or 4 hour. So now I'm going to mark out this last high on the 15 minute because this was the last high before the mitigation of this demand. I've not also talked about mitigation, but I threw a light on mitigation. What I then want to see is a shift in market structure. Price should trade to the upside and be able to break above this previous high. Hello?
Yeah, we can hear you now very well.
All right, so we were talking about change of characters. Let me just go back. Like I said, we were talking about change of characters. Let me go back to this level here. I have to take everything off from my charts first, right? Let me take everything off from my chart so you guys can also see. So now looking at what I was saying, guys, this is what I was talking about. I said I know that the market on the daily time frame is in an uptrend, so I need to mark out my demand zone. Now the reason why I'm marking out this demand zone is because I'm expecting this pullback to end here. Now I'm not just going to buy immediately the market comes here and then I start to look for buys. No, it is not done that way. What I want to see is a change of character, a potential shift in market structure. So I have to see that this last high, this very one, that led to the mitigation. So if you can see my screen right now, just try to let me know. Can you guys see my screen?
Yes.
All right. So once this call ends, guys, I'm going to send another link. You understand? We've wasted a whole lot of time due to network and also due to some people who joined late. So once this one expires, wait for a new link. Are you guys with me? So that we can have another fresh 40 minutes to talk about a lot of things. Are you guys with me?
All right.
So what I was saying is this. I said when it comes to trend direction, you always want to look at the market. Like what I said the other day, you understand about market trend. That's what we started our forex on. We started with market trend. I said first of all, you have to look at the daily time frame where the market is, either on the monthly or on the weekly or on the daily. Now what we can clearly see is that at this point the market was downtrending, right? The market was downtrending at this point. If you look at it, what you will notice is that from this high to this low, any wise trader, any wise forex trader should know that the market have sold a lot and it is time for you to start to see reversal. The market cannot sell all the way from here to here and still continue selling. It is possible, but then we can see a potential shift in the market structure, and that's exactly what we saw here. We started seeing the market shift from this level to this level right here until the market started flying in an uptrend. Now this is where we saw the market. The market came to this point right here, which is an order block. What should we expect from an order block? This is going to be where we are going to see a potential pullback. We are going to see a pullback. That does not mean that the market is now continuing in the downtrend. It simply means that the market wants to push back down to anticipate the continuation of the uptrend or the buys. You understand? Now what you have to do is to mark out the area you believe that the market will be coming to, since you've seen where the market is reacting from. The areas we believe the market will come to is going to be this level down here and this level up here, right? So what we're going to do is this. We are going to wait for a change of character. So we are going to wait for the market to push back down, mitigate this supply, and then go on to break above the previous high. Now there's possibility that the market might sell to this down zone. That's why we are not going to enter from here except we see a change of character. So once the market mitigates this daily time frame, this daily zone, and we see a break above the previous high, that's a change of character. We are going to identify this on the 15 minutes. Once we identify this on the 15 minutes, that the market has now given us a change of character, that's when we adjust. We can take that entry on that 15 minutes, or we can take our entry on the 5 minutes. You guys should not worry about entry for now. I'm going to teach you guys about my own entry method, how I do take my entries, right? We are talking about change of characters and break of structures in this class. That's when we are going to look for a potential zone, which is our demand zone, to take off these buys into that highs, right? That's going to be an example of a change of character. So now let's play price and see what happens if the market comes into this zone, right? So let's play price real quick and see how it plays out. So the market is there playing out. Now if you look at the market very well, we did mitigate something around here, right? And then we see a potential shift. What are we going to look out for now? We are going to look out for the last high that traded into this zone. So what we are going to do is we are going to identify that level on the lower time frame. So it's going to be this zone. It should be within this zone, because this is the major zone that we had that mitigation before the market started moving to the upside. So we are going to cut this part out and go and search on the 15 minutes. So once I confirm this push, this mitigation, as soon as the mitigation is done, that's when I'll go on to the 15-minute time frame. Right? That's when I'll go on to the 15 minutes. I don't think I can do a replay on the 15 minutes, so I'll just cancel that replay. Once I cancel that replay, we are going straight. We have the area marked out already. This is the area marked out. So now we can go on the 15 minutes. Once we are on the 15 minutes, let's look out for that area, that level. Whoa. Okay, this is it. This is it right here. Now, if you see what we have here, this was the zone. So let's delete it since we've seen it. You look at what market did right here, right? After the mitigation of that zone, we saw a push above the highs. Market started taking out all the previous highs. Whereby in this case right here, let's go on to a more higher time frame for a clearer picture. Now let's look at it on a clearer time frame. If you look at what the market was doing right here, you'll see what we did. So we have this high, we have this low, we have a lower high, we have a lower low, we have a lower high, and then a lower low. After the mitigation of this zone, what then do we have? A change of what? A change of character. So I'm going to mark that change of character out. You get, guys? Now, this was the last high that mitigate the zone. So if you mark it out, you see that this was the zone that led to this mitigation. After the mitigation, we then see this impulsive move to the upside. So after that impulsive move to the upside, what do? You mark out the last demand zone before the change of character, right? This is exactly where your entries should be. This very point, because this is the other block that led to the change of character, and this is the only other block that has an open imbalance, right? We are going to talk about that. Now you can see how a change of character switches the market from a downtrend to an uptrend. Are you guys with me? Hello? Hello?
Yes, we are listening.
Okay, okay. All right, very good.
With you.
Very good, very good. Now, if you look at if you look at what I said here, I said a change of character, right, it is the first break against the current market trend, and it indicates a potential shift in market structure. Now, I'm going to take this view. Let's look at this right now. If you look at, I'll have to go all the way into our Discord. I'll have to take a big look into our Discord. We have a nice photo in our Discord that can explain better. Over here in the resources page, we have something big, something good around there. Let me see. So this is it. Like this. Then we can start.
Okay.
All right, my guys. So we were talking about change of character, right? Now, for me, right? Let me see if we still have people who wants to join. If we have people who wants to join, I'll accept them and then we start immediately. but there's nobody. There's nobody actually that wants to join. Okay, I will be doing it from this side. I can see it clearly from this side. Better. So now we have 40 minutes to talk. You guys can also ask questions as well. If you have questions to ask, you're always free to ask questions. But I always advise strongly we ask questions based on the very topic we are learning. It used to help. But asking questions outside of the topic we are learning, it will confuse us, not only confuse us, but distract us and not allow us focus mainly on what we've been talking about. So right now, guys, we'll be starting. Now, a change of character is very, very important. A change of character is very, very important. It is very, very crucial. A change of character can be found once in the market, while a break of structure can be found several times in several places. Now, what I'm telling you is a break of structure is commonly seen everywhere in the market, because the market is always in a constant motion of creating new highs and new lows, new highs and new lows, and this thing forms a market trend. Now, the market gives you a high, a low, a lower high, followed by a lower low. This is how the market trends. But when it comes to a change of character is different. A change of character can only be found once in the market. Once. And it will always be found within a supply or a demand. Are you guys following up with this? I said a change of character will only be found once in the market, and it will only be found around the structure highs or the structure lows. For example, let's talk about a change of character first. So in this case, we can see that price was selling. So we have a high, we have a low, we have a lower high, we have a lower low, we have a lower high, we then have a lower low, which simply means that the market was selling until it got into a demand zone. Now, there is only one expectation that every smart money trader expects the market to do when it gets into an area of supply or demand. First of all, we want to work with the higher time frame zone. So if you are going to pick a zone that you will be selling or you will be buying from, it has to be on the higher time frame. It should be a daily demand or a 4-hour demand. Remember, we look at market trends on the monthly and on the weekly, and then we look at market structure on the 4-hour, 2-hour. Now, on the daily, you have to pick a demand zone. If it is not clear on the daily, you pick it on the 4-hour. These are the higher time frame. These are the time frame we want to pick our supply and demand and wait for price to react to it. You understand, guys? Now, when price reacts to it, our only expectation in this case, right? Can somebody see my screen? Hello?
Yes, you can see your screen.
All right, very good.
Yeah.
All right, very good. So like I was saying, guys, let me just do on this trading view so you guys can understand. Now, I said the time frames we want to look at to pick our demand zone on, right? We want to look at demand zones, supply and demand zones. on the daily and the 4 hour and the 1 hour. Those are the two time frame. Daily time frame and then 4 hour and then 1 hour. These are just the time frame you want to pick your supply and demand. You understand? You have to pick your supply and demand on the higher time frame. And then once you pick your supply and demand on the higher time frame, let's say for example the market is doing this, right? Let's say for example the market is trending. Now what the market is doing is this: the market created a high and then impulse to the downside to create a low, right? When the market then continue to the downside, it gives us what? A break of structure, and then it pulls back to anticipate the downtrend again. It then breaks the second structure low. That is another break of structure. It then shifts again, which is a pullback to the higher time to anticipate the continuation to the downside. It then breaks another structure. So now let's say the market is oversold in this case, and then at this point it traded into a demand. This is a demand zone. Now we are going to look for a potential shift. We are going to look for a potential shift above this high for you to be able to know that you've seen a change of character, and the buys can do what? The buys can then continue. Now in this case you have to put it in your mind and say, okay, price did not break above this high. Price did not break above this high. Price did not break above this high. Price did not break above this high, right? Now price broke below this low. Price again broke below this low. Price again at this point broke below this low, and again it broke below this low. You should not be buying yet, because what we cannot see is that price can then respect this high and go on to break this low. Now if you already entered the trade for buys at this point, then your stop loss will likely be at this low. I'm going to teach you guys about stop loss placement, so don't worry about none of these things. I'll teach you everything. Now let's say if price fails to break this high, then price is going to break this low and continue, which is going to cause you to lose. So what we will simply do in this case is not to look for buys until we see a potential shift to the upside, which simply means we are going to see the market break above this high. Once the market breaks above this high, right, once the market mitigates this zone, we will drop down to the 15-minute to see a shift above the most recent high. And this is exactly what we have here. If you see what we have here, you will see that we have, are you guys with me, or I'm just talking? Hello?
We are here, sir.
All right, very good. So now you see, when we had this shift to the downside, we broke this low, which is a break of structure. We formed a lower high. We pulled down again. we broke this low, which is a break of structure. We pulled up. Remember, anytime we pull up, we fail to break the highs. When we pull up, we fail to break the highs, and the market continues to break the low until it traded into this demand. Our expectation is that if the buyers are active in this demand, then they should shoot price above the previous high, which they did. They did impulsively. They did not only break above the first highs, they even broke above the second high. This is to tell you how strong the buyers are. Now we are going to talk about momentum, right? We are going to talk about momentum gradually. You guys should not worry. Let me show you guys here. We are going to talk about momentum. This is very important for you guys to know about price momentum. So everything is in packaged for you guys. Everything is in package. By the time this is it, price momentum. We are going to talk about price momentum. So we are not there yet, but once we are there, I will teach you guys about it. It's a gradual process. We might be having this class till January ending. Nobody knows, right? Because I want to make sure that everybody that attend this bootcamp have a life-changing experience. That's why I'm not rushing. You understand? Now, once we have broken above this high, you see how price pulled back. This momentum that broke above this high is what tells you that there are more strong buyers here than there were buyers here, Look at the buyers that bought the market here. They were not able to trade above this high. But look at the sellers that sold here. They were able to break above this previous low. Are you guys getting me? Are you guys following up?
Yes, yes.
Now, what then do we see? What we can see is that price impulse from here gave us a change of character, pulled back for a mitigation, and see how long it bought. And it is still what? It is still buying. You understand? Now, anybody that was able to spot this change of character would have been the earliest person to be in this trade. That's how I snipe. You see, sometimes people ask me, how were you able to enter from that point? How were you able to know that the market is going to reverse from that point? Is because of supply, demand, and what? Change of character. Once I have a daily demand or a 4-hour demand or supply, any of the two, once price mitigates this level, and then I drop to the 15 minutes and see that price has given me a change of character, that's the best time to enter for that buys or the best time to enter for that sells. Now, let me show you guys an example. We should have an example in the Discord. Now, if you guys have not explored this Discord, you need to explore the Discord. There are a lot in this Discord that you can actually learn from, like the resources here. If you look at the resources here, you will see we have liquidity, screenshots, and all of that. We have some important notice here. We have these images. You can download them and keep them in your book. Bullish break of structure, bearish break of structure, change of character versus change break of structure. You can have these things in your phone, and then you can go and look at all of these things in the resources page. You can see what we have here, engineered liquidity, right? Over here, you can see all the resources here. We have a lot of resources here. And then if you come to my chart, you will see a lot of before and after. Now, if you look at this trade, right, you will see what we have here, right? This is a supply. I'm expecting, I've seen a change of character, right? Because this is the last high that gave me this low. Then an impulsive move to the upside, which means price has broken above this previous high. I'll be expecting a pullback to take the buys, right? Another one I can use. Okay, for the change of character, right? For the break of structure, while we are looking for the change of character, let's also be talking about the break of structure. Now, I said the break of structure is the break above the previous high or the previous low in continuation of the direction that the market is currently trending in, right? Now, if you see we have a low, we have a high. We have a higher low followed by a higher high. This higher low broke past the previous high. That is called a break of what? Structure. This new low broke above this previous high. This is also known as a break of what? Structure, not a change of character, because the market is already in an uptrend. So what should we do if we are using a break of structure for our entry? Now, you see, within this structure low, this is the order block. We are going to talk about order block. This order block led to the break of this high. That it also has what? An open imbalance. So now we are expecting the market to pull back. Now, when we talked about the market structure, in the market structure class, we say we don't trade the pullback. You're not going to trade the pullback because the pullback is not impulsive. It is just a pullback to bring in more buyers. You see how Bitcoin reacted, right? Bitcoin dropped to 98K and then shoot up to 108K. So if the market is buying massively, once it breaks above any of the previous high, it will do a pullback, because there are traders who are taking profit at this level because they bought here. So anybody that bought here, once price goes high, they then tend to do what? Start taking profit. Once they start taking profit, it will then send price back to where the uptrend started from. And once the market gets to that level, it will do what? The buyers will step in again. The buyers will step in to push price up. This is what we see. An impulsive. This is part of what I said, price volume. We are going to talk about price volume. You understand? Let's be looking out for more examples about change of character. Very, very important. Something I really want to see, because this is what I always look out for, especially when I'm picking my zones on the higher time frame. Now, you should not be looking at change of character on the lowers, like the 1 minute, 3 minutes. The lowest you should go if you want to identify a change of character should be 15 minutes. 15 minutes is fine, right? Now, let's look at this trade here. There is a trade that is right here. I took this trade, was on Euro USD. If you look at the example of this trade, you will see it very clear, very clean. You see that we were selling. Are you guys with me? Hello?
Yes.
All right, very
We are
good.
here.
All right, very good. Very good. If you guys see what we have here, you'll see that the market was downtrending. Forget about this part. This is where I entered for the buys. So forget about that part. Let's talk about the part that led to the part that gave me the entries. That's what I want to talk about. I don't want to talk about the part that has played out already. Rather, I simply want to talk about the part that gave me the entries. You understand? Now, this is how I got this entry. The market was selling. The market was selling. When the market was selling, this was the last high before we mitigate this demand. Can you guys see this demand zone here? Before the mitigation of this demand. Now, price after that mitigation impulsed to the upside, but it did not break above this high, which means we did not see any confirmation to buy. It pulled back again and then reacted to the upside. This reaction is what then gives us a change of character. Can someone see a change of character there? Hello? Can someone see a change of character?
Yeah.
Right,
Yeah.
good. After that change of character, you see that immediately price broke above this high. We then saw a pullback. After the pullback, that's how we started seeing the trend. I waited for a change of character, and I also waited for a break of structure. After the change of character, the next break is going to be a change of a break of structure. After that break of structure, that was when I looked out for entry, and this is where I got my entry. You understand? So for me to get this entry, this clean buys, I had to wait for a clean change of. Let me show you guys when the trade has not played out. It should be here. This is when the trade has not played out. Right there. The signal was sent as well. So this was it. This was when the trade has not played out at all. It was approaching the zone. For the fact that I have seen a change of character, for the fact that I have seen a break of structure, this is what prompts me to take this trade. If you see what we have here, you see that price mitigated this demand. Price mitigated this demand. This was the only demand that has not been what? Mitigated. That was why I took my entries here. Now, if you go down to the book, you see what I wrote there in the book. You see what I wrote there? This is what was there. I said, break of structure, it is a break in the current trend, continuing in the direction that the market is currently in, right? Continuing in the direction that the market is currently in. So now, look at what I have here. I want to show you guys what we have here. Now that the market broke structure, it simply means that the market wants to continue in an uptrend, right? It simply means that the market wants to continue in an uptrend. And then let's talk about the change of character. Change of character. It is the first break against the current market trend, and it indicates a potential shift in the direction of the market. Now, see what we have here. See what we have here. We've seen a change of character. We've seen a break of structure. There is nothing that is going to hold me from taking this trade, right? I'm going all in, and that's what I did. That's how you should be using change of character. That's how any forex trader should be using a change of character. And also, this is how they should be identifying breaks of structure. Breaks of structure is normal. It's something anybody should try to understand. Market shifting above every previous high. Market shifting below every previous low. So for as far as the market is trending, as far as the market is trending like this, so let me take this one out. Take this one out. Now, guys, as far as the market goes up, pulls back, if it did not break this low, there's no break of structure. Once it trades above the previous high, there's a break of structure. If it fails to trade below this low, there's no break. If it trades above this high, there's a break of structure. Just like this. But if this uptrend is tired, that is when you then start to see a change of character, which then anticipates a change of the market direction. That simply means the market will be trending to the downside. Now, if any of you have any question concerning what we've talked about today, right, you can ask your question, so we have much time to deal with every other person's question. So it's a free house. You guys can ask your question now. The video is being recorded, and I will edit and send this one and the previous class we had on Monday. You guys need to know that our class is always Mondays, Wednesdays and Fridays. On Monday, I said our next class is going to be on Monday. Now I forgot, guys, we did not take class on Friday. So on Monday when I was teaching, was on my schedule was class for Friday. So I was thinking it was a Friday. I forgot it was Monday. That was why I told you guys our next class is going to be Monday. You understand? I never knew that we were already in the Monday. So that was a big mistake. I later come to see a lot of people saying Monday is too far, Monday is too far. No, 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 no. It's a big mistake from my side, right? If you have a question, you can ask, guys.
I have a question. Question is, how do I know that this a particular area is my order block or is my point of, let me just say, my POI?
All
How do I
right.
know that
All right, now.
this is my order?
All
This
right.
is my POI.
All right, now. We have class on today is Wednesday, right? We have class on Friday. Yes. That class, we are going to talk about supply and demand. We have another class that we are going to talk about order blocks. We have another class that we are going to talk about point of interest. So now, I will advise you, let's first of all ask question about this break of structure and change of character. In that class where we talk about POIs, which is points of interest, supply and demand, order blocks, then you will understand how to pick the best entry points as your POI or as your supply demand or your order block. Now, all these things is the same thing. Forget about the names. Demand, yes, order block, POI. These things simply means the same. But I still have class on the three topics because I really want to break these three things down so that while other people see it as the same thing, you can see the differences and what actually make a supply, a demand, an order block, and a POI, a POI. A POI is not a POI except it is a POI. You might say this is my POI, which simply means points of interest. But now it is not a valid POI. That's why I said you will know the difference from a POI. There are types of POI. A lot of people is going to pick the POI that will never ever hold. Price will not respect it because it is not a valid POI. So we'll talk more about that when we get to that class. Gradual process, we are growing. Gradual process, we are growing. Right? Gradual process. So if you have any question about what we've talked about today, you can simply ask your question. Right? But if you have no question, you simply wait for the recorded video. When I send it, you can go through it and then write down your question. In our next class, you can ask your question. I would like you guys to always ask me questions because that's how I know what you're lacking and what you need to understand. Right? So try your best. While you're studying, write things on your notes. In our next class, you can ask me. You understand, guys? And what we've talked about today, if there's anybody that don't understand, just say I don't understand or tell me where you want to understand so I can repeat before we run out of time, guys. Anybody else? Alright, so that will be all for today. I'm going to edit the video and send into the Discord tomorrow. Right? I'm going to edit the video and send into the Discord tomorrow. Thank you very much.